how do you think is a good way for somebody to really start that vetting process to do as much of their due diligence as possible on the person that's bringing them the deal? Because that's who you're betting on, right?
Right.
The deal is the deal, and nobody's going to bring you a crap deal, right? Like they're always going to bring you something that has great returns, and there are risks, obviously, and all of this stuff. But yeah, long-winded answer or question around how do you get comfortable and ask the right questions, and what are some of the questions that you ask that you maybe didn't mention already?
Yeah, so I'll share a few specific questions, and then I actually have a guide, a free guide on my site for
Nice.
10 specific questions to ask from investors. If you or the folks are interested in what types of questions to ask before you invest with anybody to make sure you safeguard your investment, that's on there on the website.
Yeah.
But two or three big things that I look for. One being location. End of the day, real estate is still a lot about location. I think we forget about it, but at the same time, especially in this market, the real estate does appreciate. Anybody now till 20 or 30 years from now, all of that real estate will appreciate. But if it's in a great location, it will appreciate really well. So thinking about that location being an important one. Second thing, so my background is all corporate. So for me, every single big project I've done, and I've managed over 50 to $100 million projects, sometimes larger, almost always for every single project, one of the big things we talk about is risk mitigation and risk mitigation strategies.
Yep.
So just sitting down and thinking about, okay, if you were to invest in this specific deal, what are the risks associated with it? And really asking your sponsor team, have they thought about the risks related to that? So specifically, interest rate being high. How
Yeah.
are you mitigating the interest rate? Okay, are you buying a rate cap? For how long? Okay, is your underwriting based on those interest rates and rate cap? Let's say you're hitting the ceiling on those rates. Can you still make all the bills, and can you still have a cash flowing deal?
Right.
So those being like 2, 3 important ones to think about right off the bat. And then, one thing that some of the folks forget about at times is really look at the experience of the entire sponsorship team. One of the things, and you probably can attest to that, is there's lots of pieces. When we are bringing together
Yeah.
these deals, there's lots of pieces to it. So just one person's experience is not enough. You really do have to look at holistically what that sponsorship team's entire experience looks like. So those are, I would say, three big nuggets I would look at.
Yeah, one thing I definitely start to, when I look at deals that I'm either going to bring to my investors or that I may passively invest in myself, you really want to know who the asset manager is and know what their background is. Because we're seeing right now that if you bought a deal in 2019 or 2020, you could have sold it in 21, 22 and made a lot of money, and you looked like a genius, even though you may not have been a great operator. And we're seeing now that especially the value add bridge loan variable rate debt deals are struggling in a lot of instances. And it comes down to who is the operator, who is the asset manager that is actually keeping the property management team, the on-site team up to date, making sure they're doing the things they need to do. So I really am doubling down on making sure that the asset management function of a deal is strong and they have experience, and it all comes back down to track record and all of that stuff.
Yeah, absolutely. And as an investor, it's very difficult for investors to know what type of questions to ask from an asset
Yeah.
manager. Couldn't agree more. But even just a basic question, as you just mentioned, hey, did you actually update the property? Did you actually get higher rents than predicted? And just some of those basic things, because there's quite a few folks, to your point, purchased a property, didn't really do many updates, and then were able to turn around and sell it for profit only because the market was increasing at a fast speed and they could
Right.
just get profits out of it without really doing anything.